3 ways that you can niche your accounting or fractional CFO firm. So what I'm holding in my hands is something that took over 15 months in research and identified 3 patterns that every single firm fall into in terms of how they get into niching. This could finally be the video where you get some clarity about niching, about what you should be expecting if you decide to make that move. That is the mission if you choose to accept it.
Ethan, where are you?
Right here, Benji, right here. If you're ready, I'm ready. Let's rock. And by the way, if you're asking yourself why I'm wearing this suit, it's because I'm having my own sort of Tom Cruise moment and I'm just having fun with it. So that's essentially what's going on. And the second order of business is just to see what's on this thing. So let's just go ahead and check it out, shall we? Oh, a laptop. What a surprise. I had no idea. All right, let's see what's on this thing. So another thing I want to say here before we can get into the goods is I just want to say that this is not a video about accounting versus finance people. This is just a video about a research that was conducted for 15 months. And in that 15 months window, I ended up uncovering 3 patterns that every single firm falls into when it comes to all things niching. So I want to go over the math, the logic, and the facts. And the other thing that I'm hoping to accomplish with this video is kind of give you the marketing implication for every single pattern or every single way of niching. Because basically, if you decide to niche your firm a very specific way, there's going to be a certain way that you have to market your firm. So I'm going to give you the marketing implication of what that means in just a moment. What I mean by marketing implication is basically the price of admission for every single level of play, because we have 3 different ways of playing the game, and every single one of these patterns or ways of niching has its own price of admission, because as we all know, everything comes at a cost. So the goal here is so that you can identify 2 prices out of 3 that you're not comfortable paying, and you can say, okay, so I'm not comfortable paying this much. This is a little bit too much. And you only need to have 2 out of 3, and whichever is the one remaining, it's probably gonna be the one that you're comfortable paying. And so no more confusion. Confusion is a choice by now. So just to kind of go over the research, once again, this is something that took over 15 months in research. It was 5,000 hours that was put into this thing, and over 2,500 firms that were analyzed in these data pool. So the reason why I stopped at 2,500 is just because I kind of saw the same pattern repeat over and over again. And at that moment, I just thought that everything was ready. All right, so when it comes to niching, we basically have 3 specific ways of niching. So we have firms that are challengers, we have firms that are navigators, and we have firms that are heroes. Now, I'm gonna get to what this means exactly in just a moment, and I'm gonna give you my closing thoughts at the very end of this video. But just to kind of give you an introduction to this terminology, a firm that is a challenger is a firm that has decided to niche by the service that they provide. So this is your fractional CFO firm that can only provide fractional CFO services to small businesses. This is your tax strategy firm that can only offer tax strategy services to small businesses. Now, I think by definition, we can agree here that this is not really something that can be defined as a niche, but we have to look at everything through the eyes of the person we're trying to serve. The person we're trying to serve is not a technician. So for them, even though we have decided not to niche, they're still gonna have us in some sort of category, whether we like it or not. So by default, this is still a niche. Okay, so after Challenger, we have Challenger Plus. So Challenger Plus is basically a firm that decides to niche not only by the service that they provide, but also by the who. This is your solo operated tax strategy firm that only works with insurance agents, realtors. So this is basically kind of a business structure that is solo operated by the business owner and is also serving other solopreneurs. All right, so right after Challenger Plus, we have navigators. So firms that are navigators are basically firms that offer traditional accounting and finance services to a very specific demographic. So this is basically your traditional accounting firms that only work with women, or firms who only work with small businesses that have revenue numbers between $500,000 a year to $10 million a year. And the third category are basically hero firms. So hero firms decide to niche by the who. So these are traditional accounting firms that not only provide accounting and finance services, but they provide these very specific services to a very specific person or very specific industry. So this is your firms that only work with construction businesses, dental practices. And here, they're only serving one niche. They're not serving 5 different niches at once. All right, so now that we have a very good understanding of which one is which, we're now going to be seeing what is the difference between the challenger way of playing the game versus navigator versus hero. And we're going to be seeing different marketing implications of how every single one of these firms are being marketed. And hopefully through that process, you can see which one is aligned mostly with your personality. So starting off with rank. So rank is basically referring to how many people are in the marketplace that have the same messaging as a challenger firm, and what number are you? Are you one number out of 10,000 people, or are you one number out of 1,000 people? All right. And services is just referring to what it is, like what kind of services are being offered. The price of admission is kind of referring to the marketing implication of how these types of firms are being marketed and what is it exactly that's making them successful. Pivot time is basically referring to the amount of time that it takes for a firm to say, you know what, I don't want to be a challenger firm anymore. I want to be a navigator, or I want to be a hero firm. And here I'm just using industry benchmarks. This is not exact science, but it can give us a little bit of an indication of how these types of firms are kind of operating. Okay, so just one last thing here that I want to cover before we can get into the goods is that it doesn't matter which way that you decide to niche your firm. It doesn't matter if you want to niche by becoming a challenger firm or navigator or a hero firm, is that you always got to make sure that you have these 3 things checked in every single niche or way of niching that you want to get into. Okay, so thing number 1, always make sure that your market size is minimum 10,000 people, because if it's any less, it's just not going to be worth your time, money, and energy, right? So the second thing you got to make sure that you have is to have a mature market. So mature markets are basically markets that have been established. Let me give you an example. So let's just say that you and I were having a conversation and I say, hey, I'm going to buy my car through Amazon. For some reason, that's kind of a strange idea because buying cars on Amazon is just not something that has been established. Now, conversely, if we're having the same conversation and I say, hey, I'm going to hire an accountant, that is not a strange idea because people are kind of used to this idea that it's normal to hire accountants. So that is a prime example between a market that is established versus a market that has not been established. And thing numéro 3 that you always got to make sure that you have before you can get into any given niche, always make sure that you have an ability that you can create a Tesla-like offer. Now, let me give you an example of what this means. So let's say, for example, you have a Tesla and you want to sell the thing because for some reason you don't like the car, all right? You list the car on the Facebook marketplace. I can almost guarantee you that within 24 to 48 hours, you're going to be getting 20 to 25 different messages from strangers that want to buy the thing. Conversely, if you were to sell your, for example, a 2007 Honda Civic, you're not going to be getting as many messages as a Tesla because a Tesla is a product that is high in demand. When people are literally messaging you, they're convinced that they need to buy the thing. If you have to sell the Honda Civic, you're gonna have to sell it based on features. You're gonna have to say, hey, my car has these many features. It has AC, it has all of these things. Whereas a Tesla, there's not convincing of any kind. So always make sure that you have an ability that you can create a Tesla-like offer. I'm gonna be covering these in the next couple of slides, but I just wanted to kind of give you a little bit of a heads up of what this means. All right, so we're now gonna be getting into my not so super fancy table here. All right, so moving on to Challenger. I think we can see why I was wearing a suit. So Challenger, the rank here is 1 out of 10 to 30,000 people. I think these all make sense. Services is individual expertise. Price of admission, once again, this is referring to the marketing implication of how these types of firms are being marketed and what is being successful for these firms. So there's 2 options in this case. We have option number 1 is to post 7 to 12 times a week, which could be a lot, but it all makes sense because if you're one person out of 10 to 30,000 people, if you need to be noticed, then you just need to increase the frequency of your post. So that is why people that are usually playing here tend to post a lot on social media. So they're posting something here on LinkedIn, they have something on their podcast, they have something on their YouTube channel, they have something on their Instagram, they have something on Twitter. Like they're posting minimum 7 to 12 times a week. Now, what if you don't have the personality of someone that can post 7 to 12 times a week on social media? Then the only option that you have is networking. So networking is referring to anything that has to do with speaking gigs, conferences, partnerships. All of these things for me are considered as networking. This is an amazing strategy. However, it cannot be scaled. And because it can't be scaled, it is going to lead to low demand, and low demand is going to lead to high client concentration. What I mean by high client concentration is basically when you have a client that represents for more than 30 to 40% of your revenue. I think this is something that is known in business, that if you have a client that represents more than 20 to 25% of your revenue, that is a high risk operation, because what if you lose that client? This is why a lot of people tend to have a plan B in terms of having an additional source of revenue, just in case if they were to lose a client that represents for 35 or 40% of the revenue. So again, I'm just trying to give you facts here. If you can make this work, and if this is something that is okay with your personality, you can make it work. People make it work. The pivot time here is about 4 to 5 years. Again, this is kind of referring to the amount of time that it takes for someone to say, you know what, I don't want to be a challenger anymore because of the price of admission. And then they move on to maybe becoming a navigator or becoming a hero firm. All right, so the last thing I want to show here for challenger is I want to show you how the challenger way of playing the game shows up on the supply and demand curve, because I think we can all agree here that there is not a single business on this planet that is not subject to the rules of supply and demand. And I think the major problem in the accounting space is that a lot of people only think in terms of supply, supply, supply. And the greatest position that any given company can be in is to be in a position where you have more demand than supply. I think this is obvious. So how does the challenger way of playing the game show up on the supply and demand graph? So here it shows up exactly as you can see it on your screen. The demand curve is actually shifting away from you, which means that whatever offer that you have to create is not going to be a Tesla-like offer. Because remember, when you're still playing here, this affects your ability to create demand at scale, which is why the demand curve is not shifting in your favor. You kind of have to do a lot of work to shift it in your favor. This is why a lot of people that are usually in this position tend to do a lot of posting on social media. The second problem that you have is that because you're serving a lot of different niches, you're creating a lot of operational drag behind the scenes, as opposed to someone that is only serving one niche. And the more operational drag that you're creating behind the scenes, the more and more people you need to hire to come and help you in your operations. The more people you need to hire, the less profitable that you are. So not only do you have this marketing problem, but you also have this business problem. And these two problems end up creating even more problems behind the scenes. So just ask yourself, is this a price that you're willing to pay? If the answer is yes, you're all set. If the answer is no, then I think you owe it to yourself to see what other ways are there for you to play the game, which is Challenger Plus. So Challenger Plus, okay, so very quickly, I just want to stop this here for a second, just to say that I'm not trying to paint myself like this perfect guy, because I am far from being perfect, if I have to be honest with you. I still have the same anxiety attacks. I still have the same set of fears. I still have my insecurities. I'm just as imperfectly perfect as you are. My primary job with this YouTube channel is to make sure that you, as the firm owner, that you have all the information that you need to make the right marketing decision. That's all I wanted to say, because I know sometimes it can be a little bit tough to kind of get any sort of human touch out of these YouTube videos, and I just wanted to add that in just in case. All right, so Challenger Plus, the rank here is 1 out of 1,000, which is getting better, so that's amazing. Services here is financial consulting and one-time offers. So this is basically someone that is, again, if we remember, this is someone that is running a solo operated business and that is also serving other solopreneurs. So basically they have an education business, and the offers here are digital courses mixed with consulting. So a perfect example of a one-time offer is, for example, we'll teach you how to become your own fractional CFO, and it's going to be a 6 weeks engagement at $3,500. So it is a one-time offer because it's not recurring. As far as the price of admission, you have two options. So option number one is to post a lot on short form social media. So if you're using short form social media, you're posting 5 to 12 times a week minimum. And if you're using long form content, because long form content has a longer shelf life, you're posting 1 to 3 times every 2 weeks. Second option is paid ads. So for example, if you have an offer between $2,000 to $3,000, it is to be expected that you should have a budget for $8,000 to $12,000 as your budget. So you don't have to do either or. So you can do organic content and also a little bit of paid ads. Now, something that's part of the price of admission is that 85% of your sales are one-time purchases, and 10 or 15% of that is recurring. Here, you're gonna have a Tesla-like offer. It is a must, and this is perfect for solopreneurs. As far as pivot time, it is on two extremes. So on one side, it's either 2 to 3 years or 9 to 10 years for someone that has a very successful business, because if you can make this model work, it can be highly, highly profitable. For the supply and demand graph, here the demand curve is kind of shifting in your favor, because remember, you do have an ability that you can create demand at scale because your messaging has a who, and because your messaging has a who, it's going to be a lot more stickier versus someone that is serving multiple niches at once. So here you do have an ability to create a Tesla-like offer. So ask yourself, is this a price you're willing to pay? If the answer is yes, you're all set. If the answer is no, then let's just take a look and see what other options are available to us. And now moving on to navigators. So navigator firms, the rank is 1 out of 2 to 3,000. So things are kind of improving in terms of positioning. So that's a plus. In terms of services, if we remember, these are basically firms that not only offer financial, but they also offer accounting services to small businesses. In terms of the structure of their services, it is about 25 to 35% advisory services, and then 65 to 75% of that is going to be tax and accounting, which, as we all know, are amazing, but they tend to be labor intensive, which means the firm is just not as profitable. The price of admission is kind of the same thing as Challenger. So the posting here is about 7 to 12 times a week minimum, because again, their messaging is not as sticky, because these firms are still serving multiple niches at once. And because the messaging doesn't stick as much, then you tend to do a lot more of it. The second option is to do networking. And networking, like I said, it is amazing, but it tends to lead to low demand. The pivot time is kind of the same thing as Challenger. In terms of the supply and demand graph, like I said, these types of firms don't have an ability to create demand at scale because their messaging is just not as sticky. And because it's not as sticky, that affects their ability to create demand. And this is why a lot of these firms are not in a position to create a Tesla-like offer. So again, ask yourself, is this a price you're willing to pay? If the answer is yes, amazing. If the answer is no, then let's just take a look at the hero way of playing the game. So this is the last level of play. And in terms of rank, this is 1 out of 100. So that's A+ in terms of positioning. Services. The structure here tends to be about 65 to 85% advisory services. And then 15 to 35% of that is going to be tax and accounting. This is an amazing structure because, as we all know, advisory services tend to be a lot more profitable. In terms of the price of admission on how these firms are being marketed to be successful, we have option 1, we have social media posting. So this is about 1 to 3 times. So this is using long form content, because long form content has a much better shelf life than short form content. So second option is paid ads. Why? Because you have good positioning. The whole reason why a lot of people in the accounting space have a bad experience with paid ads is because they don't have good positioning. If you don't have good positioning, of course, you're going to be losing 90 cents for every single dollar that you have to invest in your marketing. Third option is networking. So obviously this is something that makes a lot of sense, and these don't have to be either or. You could use all three at the same time. Now, something that is also part of the price of admission is that you need to have a 2-year experience. Again, this is according to the research. Of course, there are always exceptions, meaning this is a great position for somebody to transition into from challenger, challenger plus, navigator to now being a hero. And that is usually like a 2-year type of experience. Like, it's not something that somebody gets into as a new firm owner. So again, this is according to the research. It's not based off my opinion. All right. The other thing here is that you need to be spending minimum 30% of your time doing high margin activities such as marketing, business development, that kind of stuff. So if you have a personality of someone that wants to spend 95% of your time in the fulfillment side of the business, which is operation, this is not going to work here. Third is, this is not something that you get into and then you're like, oh my God, I have a multi 6-7 figure firm, like boom, and then you're successful. This requires a 3 to 5 months runway, because usually when people transition to becoming hero firms, they do have an existing firm and then they create a separate division on the side. And that is why this whole thing can take 3 to 5 months, because they're still running their existing firm and then on the side, they're building this additional division. Pivot time tends to be about 9 to 10 years because, again, this is the way of playing the game that has all the benefits in terms of being able to say, hey, I want to work less than 40 hours a week. I want to pick and choose my clients. I want to send my kids to this very private, super private college. All those things are possible in the most optimal way if you decide to play the game as a hero firm. Now, in terms of the supply and demand graph, obviously you're in a much better position where you can create demand at scale because your messaging has a who. So you do have an ability where you can create a Tesla-like offer. So ask yourself, are you comfortable paying this price? If the answer is yes, amazing. If the answer is no, then I would just go back and compare it to other ways of playing the game and just kind of see which one is mostly aligned with your personality depending on the price of admission. Now, let me just give you my closing thoughts. So the whole point of why I'm making this video is not for me to redefine what success is and what it is not, because if I have to be honest with you, I think success is kind of subjective to the individual. But something that we can all agree on is that the whole reason why a lot of us got into entrepreneurship is so that we can chase after freedom, because freedom is having an ability to say, I want to do what I want, when I want. And when you think about that as final destination, I just want people to be aware that there's not only one way to play the game. There are multiple ways of playing the game that can get us to final destination. That is why I made this video, to make sure that people are aware of different ways of playing the game, and whichever way that they decide to play the game, are they comfortable with the price of admission? And if not, then they can just look at other options that are offered to them. When you fundamentally think about the concept of freedom in terms of achieving it, we all have two choices. We can do more to achieve freedom, or we can do less. And I'm all about doing less, because less is more. Less is when we're happy, fulfilled. So how can we achieve more by doing less? When you think about some of the best people of any given industry, it's not because they're working more hours than we do. It's because they have leverage. And because they have leverage, they get to have a better return for every single unit of time that they invest in their business. They get a 30, 50x return, whereas the average person is only getting a 1 to 2x return. Okay, but the question remains, how do we build the leverage? If you're a 1-person business or if you're a 20-person business, it's that simple. You build assets in your business. Let me give you an example. This video that you're watching right now, this is an asset for my business because I'm creating this video once today, and it's gonna continue to work for me over and over and over again. Obviously, as you can tell, this is something that I'm obsessed about. And this is something that I not only do for myself, but also for people that I'm going to be working with as clients. All right, so now that we covered everything, I'm now going to be getting into answering a few questions because I know these questions are for sure going to come up. If there's a question that I haven't answered, you can go ahead and post it in the comment section and I'll for sure get back to you as soon as possible. Okay, so first question, is it possible to be all three at the same time? And again, this is just me using logic and using the numbers and all the research. This is not based off my opinion, because my opinion, to be honest, does not matter. I'm just using math, logic, and reason here to answer that question. Okay, so yes, it's possible, but only for Challenger Plus and Hero. The reason being is because these are the only two where you have the demand curve in your favor. And because you have the demand curve in your favor, then you have an ability to create a Tesla-like offer. And this is actually like an amazing strategy for someone that is building a firm that they want to sell in the future. If you can imagine your firm standing on two pillars, the first pillar could be Challenger Plus, which is basically the education side of the business. And then the Hero side is basically the one for your high-end client services. And when you have these two pillars and you have an amazing A+ team, which is going to be the thing that's required for anybody to pull these off, is that you can build an amazing firm, and that can be a great asset, especially if you're looking to have some sort of exit within, I don't know, a couple of years. So you can have a huge multiple, because not only do you have one side of the revenue that's coming from the education side, but you also have client work, and these two things combined. Second question, what's a Tesla-like offer? What is included, what is not included, how do you structure it? That is actually going to be part of the next video on this channel, so you can go ahead and watch that video right here. I'm going to be publishing this video within the next 10 days on this YouTube channel. If you're watching that video in the future, you can go ahead and watch it right about here. Otherwise, if you're watching this video just right now, I'm going to be publishing that video within the next 10 days on this YouTube channel. So be sure to subscribe. Thank you so much again for your time, and I will see you on the next one.